Hello and welcome to the Crypto Beat. My name is Tim Copeland. I'm head of growth at The Block. Joining me today, we have Mike Silagadze, founder and CEO of EtherFi, Stefan George, co-founder of Gnosis, and Itamar Lesuisse, the co-founder and CEO of Ready. Welcome to the show. How are you all doing?
Hey, Tim. Thanks for having us.
Thanks for having us, Tim.
Awesome. Glad to have everyone join for this totally original podcast that hasn't had a similar sort of episode this week by any other podcast platform. As background for this call, we've recently launched comparison pages on The Block, starting with crypto rewards cards. I personally reviewed 28 cards to find the cards that give you the highest rewards with the lowest fees. Just go to the ratings page on theblock.co. You can find out which is the best card for you. Now, today's episode, we have 3 of those card providers to chat about cards, payments, and neobanks. So right now, there's a lot of buzz around crypto rewards cards. I'm seeing a lot of traction on Twitter about them. We've obviously done this big page reviewing every single one. There's a lot of competition between them, a lot of demand from issuers as well. So my question is, why is this such a big deal?
Well, I think there's a couple of things that have happened over the last year, I would say, that have made it possible to do not just on-chain cards, but to offer a lot of these, bank alternative services. I think that's probably the best way to describe it. One, layer twos have matured to the point where gas is effectively free or cheap enough that and fast enough that you don't need to worry about it anymore. So, for us, and I think for the other guests, every transaction is on chain. It costs fractions of a penny. So now you can have like a truly on-chain, non-custodial product. And then a lot of the last mile TradFi rails have been opened up, both from a regulatory standpoint, in that you're no longer, financial institutions no longer automatically block you if you're a crypto company. And there are providers like we make use of a company called Rain that helps folks launch Visa card programs that just have made it easy and made it a lot easier to launch both card programs and virtual bank accounts and a lot of other stuff. And it's really only in the last year that I think it's become feasible to launch these things, which is why we're seeing now, dozens of players popping in.
Yeah, just to add to this, what Mike already said, I think we are now at the stage where, just from a technical standpoint, also from a user experience standpoint, we can offer products that can actually rival existing neobanks. But then this is not enough. Like, in order to actually convert users, you have to build the bridges that allow those users to use the new tech without compromise. And I think that is the big enabler of crypto cards right now is, yes, you can have actually all your money in crypto, right? You can have it in DeFi, and you can still use it when you want to buy coffee, right? I think that's the big enabler here. And I like to kind of compare this to Skype, right? Like when I was one of the first Skype users, and I think initially Skype was just purely like peer-to-peer, right? And there were very few users actually using it. And then Skype added Skype in, Skype out, so you could actually call like regular landlines. And also people could call you on Skype from a regular landline. And today everything runs on voice over IP. Like every call that we do is voice over IP. And I think we have to build those bridges also for what we have been building in DeFi. Like it cannot be like isolated. And I think the cards actually, and the connection to the Visa and MasterCard network is one very important bridge, which enables everyone to actually have the full utility that you would expect.
I think simply it couldn't be built 5 years ago. We tried. There were too many missing points. I think the demand side has changed also a bit. There's a part of the market for which we need to offer like better solution than TradFi, but then there's also a very large part of the market now that holds crypto. And in the US till last year and in Europe, you cannot move crypto to, you cannot use your crypto in real life. You cannot move it back to your bank. Your bank will freeze your account. The US has improved now. Europe, it's terrible. And so suddenly you have millions of people who own crypto, might have want to cash out or borrow against it and spend it, and they had no way to do it. And that's why we see the cards suddenly exploding.
Yeah, I mean, a big thing to me seems to be that, like, my traditional card, I can get sort of 1% cashback quite easy. Crypto rewards cards, if you choose the right ones, you can get 2, 3, maybe a little bit more relatively easily. So my question is, where do these rewards come from?
Tokens. Token incentives, mostly. Yeah. I mean, the power of crypto is you have almost like two separate universes. You have the universe of real world utility of people investing in things, and that's a relatively small corner of crypto. But you have RWAs, you can have tokenized stocks, you have bonds, private credit, all economic things, money transfers, stable coins. And then you've got this like gambling inferno casino mania with like centralized exchanges, billions of dollars in profits a month. And that inferno just creates a lot of liquidity that just like trickles down into the DeFi world. And directly or indirectly, we're profiting off of that, or we're able to offer higher rewards to users than you would be able to do in a TradFi universe. It's sort of a weird symbiotic relationship, but I do think that's the killer hook that will allow crypto to onboard, a lot of users, more normal users, day-to-day users that are not just there to gamble, because it's plugged into this reward system that TradFi just doesn't have access to.
And I think so. There are the incentives, and obviously we benefit from it too. I mean, our users benefit from it. I think it's okay to have a phase of let's say semi-artificial one, but I think there are also fundamental element of crypto that allow to reward users in different way. There are things that are much easier to do. Simply as, for example, earning a yield, whether it's us or users on cash balance. You have to understand that if you look at the biggest point program in TradeFi, that is probably Amex, it's only by spending on the card. You don't hold balance with Amex. And they could probably do it, but the new company would need many years to become a bank. In Europe, you can't, yeah. And so you don't earn points on your balance. And so they might benefit, but as a user, in crypto, it's extremely easy to do. It's a matter of weeks. So you can be much more creative on how you funnel value back to users. We offer so much lower cost. I mean, we're not teams here of a few hundred people working on compliance. So at the end, if it's cheaper, the user gets more of the value back.
I think that's a really great point that you raised. And I mentioned specifically that like Amex now finally does have bank accounts. You can, if you're a US user, you can just set it up. But it took them 20 years to do it. And this is the difference in crypto. You can just launch these things and have the power of composability that allows you to construct these products that are just 100 times better than what you would get in TradFi. And you don't have these artificial walls between your checking account and your investing account and your insurance and your art collection and whatever and your mortgage. Like, they're not in separate silos. In crypto, you can just have these things in a single system. And I think that's the reason that this new crypto neobank category is going to replatform finance. It allows you to create better products in the end.
Yeah, I think also in our case, it's basically subsidizing growth, but you can subsidize it because the arbitrage between, let's say, TradFi finance and DeFi is so big that there are many ways you can capitalize on it, and which allows you to effectively do subsidy on this part. And I think ultimately wallets are not so different from neobanks. So banks, they have three main incomes, which is net interest margin, right? Like earning on the capital that is held in wallets. It's transaction fees. Yeah, we have the same integration of exchanges, right? There you can potentially take a cut. And I think the only thing that I have not seen yet, I think starting also with crypto cards, is just account fees, right? I think right now all cards are for free, but I would also expect in the future probably there will be like a base fee for some of those cards. And all of those allow us to right now subsidize the growth. And I think that's just something that's kind of very obvious for everyone. Don't get 5% on any other card anywhere in Europe. It just doesn't exist. And that is, of course, it's like a big, nice, feature. Like it's easy to understand for everyone and makes people move.
Yeah. So I guess in your cases, it's all sort of like subsidized by the underlying layer one incentives, where they essentially want more people to use the chain, whether that's like Scroll or Starknet, and then essentially to them that's just a cost. But then to sort of crypto people, that's a good reward. I guess my question is, how sustainable are these rewards then? Are these layer ones just going to keep sort of paying this out for the next 5 years? Or are we going to see crypto rewards cards sort of lose their rewards over like the next few years?
I think if I look at, there's an end to everything. But if I look specifically at Ready, I think the users will keep getting rewards, potentially more rewards, but where it comes from will evolve over time. So there won't be just card. Today we only have card rewards, card spend. Some of the card spend reward, my incentive might drop. Some will increase because we have a debit and a credit product. Credit is higher reward, but then you will start seeing other source of reward. So we are building a unified program, whether you hold cash, whether you swap, whether you invest. And so I think on average, users will keep seeing very high reward, very high value back.
I actually think it's sustainable for a while. I mean, you're honestly, I mean, you're seeing pretty high cashback reward cards from Coinbase, from Robinhood, and it's no surprise that those, like versus like Wells Fargo or whatever other, even Amex. I think effectively Amex only pays about 1% cashback through points. And the reason we're seeing that is because the value of a user to Robinhood and to Coinbase is much higher. Like I don't actually know. Maybe they published this information, but the average revenue per user for for an exchange like the OKX or Binance is it's on the order of like $500 to a couple $1,000s a year, depending on exactly the category of user. So subsidizing someone in the highest tiers with 3% or even 4% cashback with strict limits, like the Coinbase card is only limited to $400 of that 4% cashback, and you have to hold $200,000 in the account. So but that math works out. That's totally fine. Paying $400 for a user that's worth to you a couple $1,000s a year is totally fine. So what I think we'll probably see is the numbers will probably stay the same, but we'll start seeing maybe limits and criteria, gating criteria for what you need to do in order to get these like super high cashback numbers. Because with a crypto user, like for us, they're worth enough that it's actually not that bad to subsidize them.
Just an important point, I think, here, because you mentioned crypto card, we call ourselves more like Neobank or DeFi bank, and it's different. Someone who is a pure crypto card has no area to subsidize from. And so there's really money in the interchange and money out.
Exactly.
And I think what we all have slightly different, for us, where you do investment, EtherFi you have the staking, Gnosis you have the entire chain. Once you have multiple business lines and you can start fuel value from one to the other, the reason Coinbase makes as high value per users is not the card, is the centralized exchange. And so that's really where users will accrue the more value, those richer apps that have more than one revenue source.
Yeah, the standalone card programs are just dead. That's just not a viable business model. It's that's just not going to work.
What are the costs like as a sort of card issuer on your side? Like, is it super expensive to create like a crypto rewards card, aside from the rewards that you're giving out, or is it relatively sort of cheap?
It's pretty expensive. It's probably not viable. Probably 50,000 users, honestly, I think is like the minimum viable amount, which we're just scraping. I don't know, we're one of the larger players in this category, and we're just at the border of like what's viable. Because you have to have a compliance team. I mean, we have 4 or 5 people in compliance. We have a general counsel. You have to have licenses, which regulatory compliance. So there's certainly card programs out there that just kind of YOLO it and don't do things correctly. I mean, eventually those are end up getting shut down. But to do it properly, I mean, there's millions of dollars of costs per year, and that again, you have to have scale before you can afford that.
I would argue, actually, I've worked at Visa before, so I would argue it's cheap, actually. It could be significantly worse. Yes, having tens of thousands of 50K cards to justify it, I would call that cheap. In our case, so much is pushed out to partners, and we are much leaner, and I think EtherFi too, than others. Stefan, I think you guys are the card issuer. You are doing much more yourself. So it's more like we would work with someone like Gnosis Pay as a partner. We work with Kulipa, and there are many like that. So I would say in the big scheme of things, it's not that bad. It's just a lot of work to do it really well, down to the details. that's where, that's where I think you start seeing the impact.
Yeah, I can comment on this because Tim already mentioned it. So we are a little bit different compared to now Ready and EtherFi in the sense that we are actually trying to be also our issuer itself. So if you want to offer a card, there are a couple of components that have to come together besides working with Visa and MasterCard. So most players out there, they work with an issuer. We also work with issuers, which are basically the entity that legally can actually issue the card, and they work with Visa. And if you want to do anything, change anything, you always have to talk to the issuer to actually implement the change together with Visa. And that's very time consuming, and the issuer wants to have, of course, a compensation for this. So the question is like, what is the time when it makes sense to actually become your own issuer, right? And in order to kind of optimize a step. And that is a good question. And yes, I think like 10,000 users will not cut it. You will have to have a lot more like users and volume that justify this effort, especially also as it depends by region to region, like where you can actually issue. So Rain, for example, was already mentioned here. Great issuer in the US. We are becoming an issuer here in Europe. And there are issuers, of course, elsewhere on the planet. And what we are trying to do is basically trying to wrap around different issuers that can cover large regions to offer a complete, like ideally even global issuance. Right now, actually, nobody has this. It's kind of a myth that someone has a global issuance. It doesn't exist. But of course, for DeFi players or generally in crypto, where we always think kind of globally, this is what most people desire. So I think that's kind of where we have to see what makes the most sense. Either kind of try to address like the broader crypto audience where like everyone assumes they can operate everywhere, or really nail down in one region, say Itamar here in Argentina, or I don't know, like there's many other like countries where you see crypto is becoming extremely important to the population, and try to really solve the best local experience, which requires you to be actually on the ground and set up offices and that optimize for the local experience. Like for example, just to give an example, if you are trying to serve a market from like one country, say South America or the Americas, then it will be impossible for you to accept local stable coins. So that's why all the cards actually US dollar denominated. And that is, I think for crypto people, that totally makes sense, right? Like all the yield opportunities are US dollar denominated, so I will have to anyways convert. But if you really want to become a neobank that is used by millions and millions of people, they actually probably would like to have exposure to the local currency and not always think in their head like, okay, how does this actually convert to US dollars? So it's a long answer. Short answer is complicated, and but we can all agree, yeah, you have to really scale to a very large amount of users and volumes to justify the effort.
Okay, so is it quite likely that we're in a boom phase right now for crypto cards and that we're going to see sort of consolidation over the next year or so?
Yeah, I would assume that.
Sure, yeah.
And you will see a lot of, I think, Mike, that was your point, but Jules, last time you mentioned all the dodgy cards. You see a lot of cards that have magically no KYC, and they will mostly disappear. They are not legal. They don't follow Visa rules or MasterCard rules. They hack things around corporate cards, etc. So you will see, I think, a cleanup in the market.
Cool. So, should everyone in crypto have a rewards card?
Yeah, why not?
Of course. Absolutely, yes.
Everyone outside crypto. Everyone should get
right.
the card, the product that gives them the most benefit.
I would say, yeah, that's actually a very good point in that, like what we're building, like I would view it as a total failure if all we do is serve the same, a couple 100,000 users in DeFi, right? This is only interesting if we can use this crypto neobank category to break out of crypto into normie circles. And we're seeing that already. Honestly, we're seeing that a lot earlier than we thought. Our initial plan was go after DeFi in 2025, go after CeFi users in 2026, so broader users who like crypto but don't want to touch DeFi. And then 2027, when we're in the many millions of users, start going after the mass market. But what we're seeing now is probably 10 to 15% of our users that are signing up are what you would call normal people that just like the rewards, they like the benefits, they're they're in Argentina, they want to hold US dollars, but they don't want to pay 3.5% tax in order to buy USD fiat. And they want to spend USD easily. And so EtherFi and other solutions give them that benefit. So I think we're actually seeing the beginning of the inflection of, again, normal people being onboarded onto DeFi and self-custody bank alternatives.
It's about finding where we are better. And I think very similar to you, we had our hypothesis around crypto native people like being blocked by the bank, they will use a card. But for example, it's much easier for us here in this room to be global than banks. And so, for example, we see a lot of demand just as travel cards. So we have zero fees on FX. We're extremely, extremely efficient on FX. And so you have non-crypto people using this as the card abroad. Because if you are not in a market covered by Revolut, you have 3% FX on every spend, 3 to 5%. Amex still charge 2 to 3% on every transaction abroad with most of their card. That's been the default. And so suddenly you start to find segments that have a need where we are simply much better than TradeFi. And so, yes, it's really accelerating. Also because it's much easier to fund a wallet now. Stablecoin are below this interaction with TradeFi. For example, we offer bank accounts now. We announced them yesterday. So you just move money like you would move it to any TradeFi app. And suddenly you have now stable coins without even knowing you have them. So we'll see more and more segments where we become better than TradeFi.
We had also a very interesting experience in Brazil where we recently launched, where actually most of our users are not crypto native users, but they are just regular users. And the reason is that effectively there's some regulatory arbitrage, like the government passed a bill where like basically getting exposure to US dollars became very expensive, and crypto was the one loophole that was still there. It will be fixed, but there are these moments where there's like some short-term like regulatory arbitrage that will drive the masses to your product. And that really gave us like a massive boost in Brazil. Simply people understanding, okay, there's an opportunity and here is something that can easily consume, even if I didn't have exposure to crypto before.
Yeah, so this is sort of going beyond sort of crypto rewards cards into the sort of services that can be sort of built around that. So what is meant by a crypto neobank?
I think it's servicing a neobank can mean anything. You can work on savings account, checking account, remittance, a stock investment. I think anything that has money now is called a neobank. But I think if you look at spending, savings, potentially borrowing, you have probably the 2-3 core pillars of a neobank. So it's about more than, it's not a wallet with a card. Let's say it that way. It's really a financial product that covers the core activity of most users into a single.
Yeah, I mean, in my view, it just needs to be a full end-to-end alternative to a traditional bank. That's what we're trying to build. Our goal is within the next 3 to 4 months, a user should be able to sign up to EtherFi and not feel like they're giving anything up versus a traditional bank. We just integrated Pix, which is the number one, it's more popular than Visa in some ways in Brazil. So in that instance, in that market, that allows users to take their salary into EtherFi. It allows users to pay their mortgage, pay their car payments, insurance, pay grocery store, anything they need. They can do through EtherFi. They can hold USD without ever having to deal with any of the messiness of and pain of traditional banks. So we hope to do that across all the major regions that we operate in, and eventually like legitimately allow people to replatform themselves from traditional banking into this self-custodial model. And I think that's really the key. Like, there's a million quote unquote crypto cards, most of which are awful. And in particular, the awful ones are the ones that they're not really crypto cards. They're attached to an exchange or something where you have to sell your crypto to buy fiat for 2% margins, and then load this card that you could then use. I think the key differentiator from like all that junk to like the legitimate crypto neobanks is that it has to be self-custodial.
Yeah, I agree with Mike. Like, self-custodial is very important because that's ultimately where I think the opportunities also come from in crypto. I would kind of, in a nutshell, for me, it is basically making the opportunities that there are in crypto accessible to everyone by integrating bridges that actually allow to tap into the TradFi world. And like Mike mentioned, like Pix, very important in Brazil to do this onboarding seamless and very cheap, right? And give users the opportunity to everything that EtherFi has to offer. In Europe, we have SEPA. We're working together with Monerium on the integration that allows users to basically on and off ramp for free, right? These bridges, they have to be super accessible. People have to understand how they can be used, and they have to be very, very cheap, ideally free. And if you have this bundled in a nice user experience, then that is for me what I would call like a crypto neobank.
That's right. What's interesting, you said giving the opportunities we see in crypto, making them accessible to everyone. I think something weird we see is actually, I think crypto makes opportunities accessible in TradFi accessible to everyone. So products that are pure TradFi product where none of us have access. They are, I would say, like private banking, high net worth type of investment. Now they are being tokenized in crypto, and now it becomes very easy for users to access them. I think that's something I was looking at Huma on Solana, for example. A very interesting type of loan. I don't have access to that in TradFi, and now in crypto, but it's a pure TradFi product. So I think there's really a lot of interesting financial product that will get much more accessible because of those new rails.
Yeah, it's quite cool. I mean, I've been experimenting with Ziff recently, where it just sort of auto rebalances the sort of highest yield platform. And it's quite a simple, quite obvious thing. But like, you don't have that. Like the number of times I've had to sign up to a new fintech app because they've got like some sort of 3 or 4% saving, but every time I have to like do a whole sign up process. Now I have too many accounts and too many different things, but you can't just sort of automatically swap between them very easily. Whereas in crypto, people can just now build things and products that do that. And they're, that's a professional product. But it sort of makes sense why shouldn't you be able to do that? So you kind of touched on this a bit with the UX thing. In crypto, it's very easy to sort of build complicated crypto things. I know EtherFi has always had a lot of like vaults and stuff like that. Do we have to make it to the point where it's the same UX that you might get with a sort of traditional neobank like Revolut, Monzo, Cash App? Like, does it have to be that simple before we sort of these crypto ones can hit mass adoption?
I think so. Yeah, all the signing random hex transactions and seed phrases, and you lose your wallet, you lose your money, and I mean, like having to you take money and you convert it into a token, you put it somewhere else, they give you a new token, you put that that whole insanity. I mean, I'm sure all of us and probably a lot of the audience members have tried to onboard friends into DeFi, trying to explain to them like, oh, listen, you can make, 5% by, putting your money into Aave or whatever. And, you think it's so simple, right? Like for us, you go into your wallet, like Aave, deposit USDC, you're done. To a normal person, like the sequence of steps to go from zero, from money in my bank account to now I'm earning whatever it is, 5% on Aave, is just madness. I mean, it's absolute madness. I have to create a wallet, and then I have to transfer it to the wallet, and then I make this in token. Oh, but you can't do USD. You can't do this token. You have to convert it to USDC, and the whole thing is insane. So all of that has to go away. All of that has to be completely abstracted away from users.
But Tim, if you use Revolut recently, I wouldn't call that simple. I mean, there's so much happening there. I think we are aiming for much simpler, actually. I think different segment will need different things. We're aiming for much, much simpler. And yes, everything crypto fully abstracted by end of year. I would say we're 80% there. To the point where you won't know which stablecoin you hold. Users couldn't care less.
I was a very early Revolut user, because Monzo had a waiting list, which was the reason I signed up for Revolut. But it's not my main account anymore. But like Revolut does have crypto features. Do you think that's sort of like, sort of traditional neobank with crypto features can compete with you guys? Or do you think you guys are going to outperform that?
I think what currently neobanks, like let's say the old neobanks, Revolut and Monzo and others are experimenting with, right? They see crypto as an opportunity, and they just want to give the existing user base kind of access to this opportunity. But it's still like them deciding, okay, like what do they want to integrate? And it's always them being the gatekeeper, and it's always them having the keys, right? Like it's not self-custodial. And that I think limits actually quite a bit in terms of what they can offer. So there has to be a much more rigorous process in terms of what do they integrate and what do they actually end up offering to the end user. So I think there we are much more flexible. And also, again, I think the self-custodial aspect is very important in terms of how much flexibility you can have in like integrating more features. So I see like the players that we are working with that are integrating Gnosis Pay, they're shipping a new version like every week, like new features coming up every week. And I don't see like any of the old players matching that speed at all. Same with EtherFi and Ready. Like so many new features are coming nonstop, and I just don't think that the way how neobanks, the old neobanks, are structured and operating today will actually be able to keep up.
I think I mostly agree. I would do an exception on Revolut. I think we underestimate how savvy they are. Extremely savvy about crypto. It's scary how strong they are there. I think they will. Their competition is more con-based, so I think they will go very strong after them. But there is, for me, some kind of race around how quickly can we become a better product than TradeFi versus how quickly some of the TradeFi products will adopt that. But not that many, I would say. Revolut, very strong. Robinhood, probably. Now Neobank is looking at it quite aggressively. So there are a few, but most of them indeed won't get there very quickly.
I think that... sorry. Go ahead.
No, I say there's one obvious advantage, right, that Revolut has, and then also centralized exchanges basically have to us, which is the distribution that they have. And that is, for me, actually the much more like bigger question in the room, like how are we able to outperform those players in distribution? That is actually the number one question for me. I think in terms of features and opportunities, yes, we are already, in my opinion, better. And I think on UX will also be on par or better. But ultimately, it matters how do you distribute and how do you reach the masses that they can already reach just based on how they have been growing. That for me is the number one question.
Yeah, I think there's two advantages that a crypto native approach, non-custodial crypto native approach has over a TradFi. So TradFi to crypto versus DeFi to last mile rails. The first is it's just structurally much cheaper to operate this kind of entity. Itamar mentioned it earlier. If EtherFi we have I think around $11-12 billion in deposits these days. If we were a TradFi institution, we would need to have on the order of 500 to 600 employees to operate this kind of entity. Whereas with EtherFi, we have just over 30 employees. So there's more than an order of magnitude cost difference to operate this kind of entity because we get a lot of stuff for free from being based on the blockchain. We get much less of a regulatory burden because we're non-custodial. So it's just there's a tremendous cost advantage, and that gets passed on to users. So the products are always going to be cheaper, always going to be more efficient to operate to offer to customers, and that's one of the reasons why we're able to offer very high cashback rates, very high reward rates. That's something that's just very hard for the TradFi players to compete with. I don't think they'll be able to do that. They can't shed 95% of their costs. So the second thing is global reach. Every time as a regulated custodial institution, you want to launch in a new market, that's tens of millions of dollars at least for you to spend. It's years in getting the required licenses. Whereas products like ours, we're able to launch more or less globally with ease. And that kind of global reach just, again, makes it possible for us to launch products much more quickly and grow much faster than the TradFi players.
What we're seeing is the same than the move to the web. I mean, you could be a brick and mortar bookstore. You had access to like one city or not even a neighborhood. Then you have Amazon suddenly that for this is much higher margin, can reduce cost and also access probably an entire market, an entire country at once. So it's really the same. We'll see much higher margin, much lower operating costs, and then global, wider reach much faster. That's not why user comes. So it's about redistributing values to users, but really it's the core mechanics of the business are very different.
Yeah. So what would you guys say is the total addressable market for crypto neobanks?
I mean, today, if you're looking at just DeFi natives, we view it as these three sort of concentric circles. DeFi natives, let's be optimistic and say it's 1 million people. Probably most of the assets in DeFi are held by a few thousand people. So, it's a very small market. And then there's CeFi users, which is people that use exchanges. They're clearly pro crypto one way or another. And that's a couple 100 million people that are regularly active. And then you go after, you go into the broader space of obviously billions of people that use banks in general. So that's kind of the rings of expansion. Today, I think products like ours are fantastic for DeFi natives. I mean, it's just best product you could have. They're okay for CeFi users, and they're like still kind of janky for normal people. But that's going to change fairly rapidly.
And how challenging is it to build a crypto neobank in the sort of regulatory situation we are now? Like things are getting better, but I wouldn't say, that we have clear regulations everywhere.
I think you said it's getting better. I would say today it's not too bad from a regulatory perspective. It has improved. We are not blocked by regulation. We can build everything we want. I think the issue is more that you still have uncertainty. So it's not a question of how it is today, for example, in the US or in Europe. It's how will it be in the US after the next election, and how will it be in Europe after the next iteration of MiCA. And so you live in an environment where you are not sure of how tomorrow will be. That's I would say the main issue we see.
I mean, I think most of the challenges are the same challenges that you would face in building any business. Like it's how do you get distribution? What's your customer acquisition strategy? How do you make sure the product is good and you have high retention? I mean, that's really challenging. I mean, that's actually very hard to do. And crypto, I would say the quality of builders for the most part in crypto is actually quite low because most crypto builders have no idea what it looks like to actually build a real product for real customers. They know how to launch token nonsense gambling mechanics. So I mean it's pretty challenging. It's hard to build a real business with positive sum unit economics. There's not a lot of people in crypto that can do that.
One thing, when people ask me sort of why is crypto like not a scam or worth anything, or sort of like what's the point with it all, the thing that I've always said is programmability. And to me, it's just like the idea of like if I was trying to build a game where I could like send out crypto every second or something, if I was trying to like do that with like an HSBC banking app, through APIs, like it's so, I just can't even comprehend how that would be. Obviously, it would have to be deposit money on the platform. Once it's on the platform, it's within that. But in terms of like sending it straight to people's bank accounts, every second, that stuff just doesn't really work. And I feel like that programmability is what really empowers all of these different products that you can build and that can all interact with each other. So like how important is that for building all of these products which could potentially be driving crypto into sort of its next phase?
I think it's extremely important. So I like this term like permissionless innovation, right? Anyone can add to what's already out there. Basically every smart contract is an API that will always be there and everyone can build around it. And that was actually leading to one of the, I would consider the most important innovation that was built on top of Gnosis Pay, which is what was then called like the recharge feature, right? The user has assets in DeFi and a community member basically built the technology that allowed users then to automatically top up their card if the card balance goes under a certain threshold by converting positions that they have in DeFi to top up the card. And I think this kind of automation makes the card way more useful, right? Users want to have as little as possible on the card. They want actually everything in whatever earns yield. And I think that was a great example of it was done without asking us for permission. Just a community member stepped up and said, oh, that's cool, I need this. And now that's one of the most desired features that one of our partners, Zeal, has as part of their app, and many people are enjoying this. And I think that's kind of what the power is of building in this ecosystem, is just that everyone can add to it. And that's also why today it's already has a lot more opportunities. $1 on blockchain is kind of more valuable than $1 in your old bank account. And that is basically coming from the fact that there's permissionless innovation.
Yeah, I couldn't agree more. And I think the analogy I've used in the past, and honestly, I don't know that people will get it until it's like it's everywhere the same way that the internet was. But there's an old video of Bill Gates. It's like 30 years old now, maybe more. Old video of Bill Gates on the David Letterman show. And the internet, this is like 1995. The internet is like barely, exists. And David Letterman is like, tell me what the hell the internet is. And Bill Gates gives the example of like, well, I can read the news on the internet. I can watch videos. I can listen to radio. And he's like, I have a newspaper. Like, you can buy stuff online. Yeah, I call the Sears catalog and order stuff. It shows up at my house. I can watch videos on my TV. Like, why is this interesting? And you don't get it because the power of the internet was that it was permissionlessly composable, in a sense that you could just like spin up services, and now you can have a thing that's like your mail and your news and your maps and your insurance company all mashed into one, and they all just talk to each other, and you can just like launch these systems without having to ask for permission in a way that was just not physically possible or efficient before. I think it's the exact same thing with crypto. You can now launch financial services in a way that would just have been impossible. You can't wire together an insurance company and a bank and in the same way that like all your stuff is completely separate in your TradFi world. And that's incredibly powerful. That unlocks a tremendous amount of interesting new ideas and products that just otherwise couldn't have existed.
Cool. And topical news, but what do you guys think of Aave acquiring Stable Finance?
I didn't even hear about that.
we didn't. I didn't know.
Also, didn't hear about this before, but also not super surprised. I mean, I think it's just a matter of market maturing.
Tell us, Tim, is it today or was it announced today?
Yeah, they announced it today, yeah.
I think it makes sense. I think everyone will be, I mean, that's the good and the bad sides. Everyone wants to be full stack. Everyone wants to be the chain, the protocol, the customer facing part. And that's why we have so many L2s, etc. So I'm saying it's good and bad. It's good that we made that so easy. You lose some benefit of interoperability and composability, but it just makes sense. The market for going.
And how long before we see a traditional bank acquire a crypto neobank?
M&A is just not a thing that really exists in crypto. Once you have a token that's out there, like what does it even mean to acquire something, right? Like it's there's not a playbook for it yet. I don't know. I don't know if it actually makes sense to do.
6 months.
Is that
my answer is 6 months because Christmas it's slow, so it will happen. We're all at Dev Connect, but yeah, it's for sure it will happen next year. I mean, are they fully traditional, or will it be a chain acquiring a neobank or a protocol acquiring a neobank? I don't know, but next year you will have too many out there. You will have M&A.
Yeah, I think it's kind of what Tim already said. Like, yeah, kind of trying to go full stack, right? Everyone wants to have participation in every part of the pie. And so, yeah, I would also say could be seen then as a way of like the market maturing. So yeah, I would also guess this should happen in the next couple of years. But I also agree with Mike. Like there have been so far very few merger and acquisitions in crypto, and I think that comes from the fact that as soon as he said, like there's a token out there, it actually makes those decisions way more difficult. And we actually did one of those in crypto, one of the few. And I can say that's certainly not easy. Yeah, let's see.
All right. Well, that's all we have for today. I want to thank Mike, Stephen, and Itamar for joining this episode. And as a reminder, the newsroom works tirelessly to get you accurate, informed crypto news. If you want to stay ahead, read the block. Thanks. See you next time.
Thanks, Tim.
Thank you, guys.